We're wrapping up 2024 today on the Central Line of Realty podcast. Welcome to the Central Line of Realty podcast. I'm Jay White. I'm happy to be here today with Blake Keziah from Fairway Independent Mortgage Corporation. Thanks for being here, Blake. How you doing today?
Thanks for keeping it compliant. I appreciate it.
We're all about some compliance.
I appreciate that. Yes. Yeah.
This is the last episode of our first year on the podcast. So I thought we would maybe try to summarize 2024 and look ahead to 2025. Does that sound like
Sounds like a great time.
All right, that's what we're going to do.
I'm excited. I got a lot of stuff lined up for you.
So the real estate market for us kind of moved from deep in the seller's market back towards, or more towards, a balanced market. And the way we measure that by counting how many months of inventory we have to sell. In other words, if nothing new came on the market, how long would it take us to sell everything that's out there? And that's called our months of inventory. And in a balanced market, that would be 6 months of inventory. So if nothing new hit the market, take about 6 months to sell it, that would be a balanced inventory, or a balanced market rather. So in 2024, we went from 3 months of inventory in the first of the year to about 4 months now here as we finish the year. So we're moving back towards a balanced market, still a seller's market. The impact of that for you, if you're a buyer or a seller, is that the pricing increases we've seen are slowing down. Prices have still gone up. They still increased some this year, but they're slowing down. It's not going up as fast. And in certain segments, it may be even going down some. So that's good news for buyers and probably so-so news for sellers. In a twisted way, it's good news for sellers too, because there's more buyers on the market as pricing comes down. So that helps buyers when pricing levels out. So we're looking for that. The interest rates over the year, I would have said that interest rates went up over the year, but we're going to talk about that. And it seems that I was wrong. So we'll talk a little bit about interest rates here. There's one other big story in real estate from 24 that I want to just mention before we go into interest rates, and I want to talk about the series of lawsuits that was hoisted upon us in the course of 2024, or were settled during 24. And the going into the new year with these lawsuits, they're going to continue. And the impact of them will be mostly felt by buyers. And so it's going to make it, I won't say harder, but it's going to make it a little more complicated for us to help you in the way that we are used to. So at Central Line of Realty, we are committed to helping buyers and sellers both have seamless transactions, and even have a little fun along the way too. But it's going to be a little tougher. So if you're dealing with your buyer's agent and they seem a little confused, they probably are. So it's fair enough to give them a little bit of leeway on that. But we're going to continue to work around those lawsuits and within those lawsuits to bring you that great service. So Blake, let's talk about these interest rates and how they have impacted us this year and how they're going to impact us in the next year too.
Yeah. I think everybody's assumption is rates have just gotten so high and rates have continued to increase, which in most cases they have for a lot of people that were looking to buy 2-3 years ago. And then looking today, they're like, wow, rates are 6, almost 7%, but the reality is the average interest rate that we sold on a mortgage as a business last year or this past year was 6.9%. So that's down, actually, it's not much, but 0.1% from 2023, where the average interest rate sold was 7%. So they are going down a little bit. So that's good news for a home buyer. It's not great news because it's not a lot, right? But what's interesting is kind of looking forward what the forecast of interest rates are going to be in the future, right? So looking over the next year, what do we expect rates to be? Nobody has a crystal ball, right? But we can look at market trends. We can look at what, unemployment's going to be. We can look at all these factors and kind of make an educated guess on what rates are going to be. What I do is I just listen to the professionals because I'm not one. I just sell the loans and I help you get approved. Yeah. So I've got a few things loaded up here from different professionals in the business, right? So U.S. News has an article here that they go over kind of different people and what they have predicted. Hold on one second. There we go. Kind of just some different predictions for the market for the year and what they predict the rates are going to do the end of this year, going into 2025 and into 2026 as well. you can see they've got Wells Fargo, Fannie Mae, and the Mortgage Bankers Association. They're kind of they're assuming that rates are going to go down to low sixes, maybe even into the fives over the next couple of years, which is very exciting for me as a loan officer, because it means that a lot of my home buyers are now going to be able to afford homes. But this is kind of like a double-edged sword, as you know, right? When rates go down, more than likely home prices go up, because that brings a lot of buyers back into the market, right? That doesn't necessarily mean more inventory, like you were talking about a second ago. So more buyers, less inventory means higher home prices,
Exactly,
right?
yeah.
So take this with a grain of salt. I got a couple other articles that we were looking at. Yahoo made a pretty interesting article here. This was, I think, earlier this week or last week, but they just go over what the different mortgage rates are going to be. They kind of assume rates are going to be going down in the near future. And then also, here's another one. This was last week sometime. I'll have to get in to find the actual part that I was looking at earlier, but everybody makes a prediction. They all think rates are going to go down this year. Nobody knows, but at the end of the day, you just want to talk to your mortgage guy, see what those rates mean for you, see if that fits you. And if rates do start to come down, that more than likely means something higher home prices, right? So definitely getting prepared for that. So
Yeah. It's really just, it almost seems totally random. How do you predict what rates are going to do when it's hard to figure any rhyme or reason with it?
Well, and what's funny is because a lot of people, they listen to the news, and the news is always broadcasting what the Federal Reserve is saying. The Federal Reserve just dropped interest rates 0.5%. That doesn't necessarily correlate to mortgage rates. I think we touched on that last month just a little bit, but mortgage rates are dictated based on the bond market and how the bond market reacts to different things in the world, right? So, it's people who are selling the bonds on the bond market. And a great example of this would be a couple months ago, Jerome Powell, he announced they're dropping rates 0.5 point, right? So everybody started calling me and they're like, wow, rates are going down 0.5%. I'm ready to buy. So, and then, we're like, well, let's go run interest rates really quick. And they actually got higher after they did that. And they were like, well, that makes no sense. You're a terrible, whatever you're selling me, I'm not buying, right? So I had to explain to them. I was like, well, the bond market is what dictates your interest rate pricing, right? And if you look historically, the 10-year yield, and I'm talking probably rocket science to a lot of people, right? But the 10-year,
I'd be one of those people.
The 10-year Treasury directly correlates with what interest rates do, right? And if you look at what the 10-year Treasury did right after that, is it plummeted. It got higher, right? When I say plummeted, I mean the 10-year yield got worse and the interest rates got higher. So again, no rhyme or reason why interest rates would do anything, but a lot of these professionals are predicting that the market's going to get stronger, interest rates are going to get lower, which for everybody out there, that means higher home prices, lower mortgage rates, lower monthly payments. But if home prices get higher, your mortgage payment's probably going to stay the same.
Yep.
Right? You're probably going to see around the same mortgage payment, but you're just going to be able to qualify for more. Right? So that's why you have to act now. I think we were talking about right before the podcast, the best position for a homeowner to be in is to have bought a house in a 6-7% interest rate with a payment that they can afford, going into a new year with lower interest rates and being able to refinance that home that they're in already into a lower mortgage payment, right? Mm-hmm. So I think that's definitely something that we need to talk about more with home buyers is if you think that, you're going to want to buy a house this year, you need to definitely think about all of these predictions. Think about what your financial outlook looks like. If it makes sense, if you can afford it now, why not do it now and refinance into a lower payment later, right? Look at the loan guy trying to sell you.
Well, that's kind of what you do.
Yeah, but it's definitely the smart, and I try to explain that to people all the time, and I think that gets kind of pushed under the rug. They're like, well, he's just trying to sell me on a high interest rate right now. But again, I had this conversation with a home buyer yesterday as well. It's like, if you can afford this payment now, if it's comfortable, all right, if you and your wife at the end of the month, if you guys can make this mortgage payment and it doesn't really hurt you that much, you need to just go ahead and do it, because more than likely rates are going to fall in the next couple of years. That's just the lifeline of interest rates, is they go up and down all the time.
Well,
So,
one of the benefits of home ownership is being able to use that home as an investment.
yeah,
And so you have to look at a
absolutely.
lot of these kind of things. Sometimes refinance might be a good investment vehicle.
Yeah, absolutely.
If you've got equity built up in the home and you can put that equity
Mhm.
to work, that's something that you can do as a homeowner that you wouldn't do as a renter.
Yeah,
And
absolutely.
so, there's nothing. Everybody's situation is different,
Mhm.
and so that's why a loan professional is someone to help you with those questions, or a real estate professional can
I'm
help
not one
you.
of those.
I think you are. I think you're a
Mhm.
reluctant one, maybe. But
Definitely.
and so, one of the things that I wanted to sort of talk about today with you is a plan we've got for January.
Yeah, absolutely.
To help with a lot of these kinds of questions and we're struggling with a title for it, but I'm
Yeah.
calling it the Home Buyer Financing.
Yeah.
And here's the word seminar. We don't like seminar. That doesn't sound like
Extravaganza.
fun.
Yeah.
Extravaganza session. So we're going to plan in January to have a get together, and probably with food.
Yeah.
So like a lunch and learn
It
maybe.
seems to bring people out.
Yeah. And so what we want to do is have 3 or 4 of you guys that are looking to buy a home in 2025, come together and just find out everything you need to know about it.
Yeah.
And so we're going to have professionals like Blake and myself and other real estate professionals there to answer all your questions.
Yeah.
And so we will, of course, come up with some details for you as to when and where and all that. But it'll be fun
Yeah. It'll be a good time.
because so much of this stuff is not fun. When you talk about numbers and it gets kind of boring and kind of drag on. But at the end of the day, buying a home should be a fun process.
Yeah,
and that's why I like Blake here. He keeps it entertaining. So here's something we talked about earlier too
Yeah.
that y'all have been involved in a lot, and it deals with homes that need work done in Western North Carolina. There's a lot of that going on right now, and so you've got some new
Yeah.
programs or existing programs
Yeah.
that
Yeah.
can help with that.
Yeah, we do a lot of renovation loans lately. And this kind of stems to a lot of different things. I'm a numbers guy. So I was just doing a bunch of research past couple of weeks, just figuring out, why, getting ready for this for one, and just really understanding the market and why renovation loans have been so popular. The average age of a home in America is 40 years old. So you know better than anybody, a 40-year-old home more than likely is going to need a bunch of work. It's
What are you saying? Like I need a bunch of work
You know-
because I'm old.
No, the 40-year-old, I mean, think about it. In North Carolina, we have a plethora of moisture issues,
Mhm.
right? So, roofs are going to need to be replaced, air conditioned units. I mean, updating a home is huge, right? But the renovation loan can cover all this stuff, right? And I say this, there's generally 4 different people that use these renovation loans, right? It's a home buyer that's in trouble. You're in the middle of a process. And let's say you have some repairs that come up, seller's not willing to fix it. Your home buyer has to have this house. They love it, right? They can then turn the loan into a renovation loan and get the repairs completed and include it in the mortgage that they finally pay every month, right? So that's one person that would definitely benefit from it. The other person would just be one that's looking to revitalize a house, right? You're looking for a house. You want to increase the pool of properties that you're looking at, right? I guess you could just include it into your pre-approval price. You're pre-approved for $300,000 or $400,000. You look for a house that is under that amount with the renovation costs, right? You're looking at a $200,000 house, $100,000 worth of renovations. Your final loan amount is going to be within that $300,000 range. The other couple people that I would recommend this to is homeowners that just want to do some updates. You don't have the cash for it. You don't want to pull out a 9 or 10% interest rate HELOC,
Right.
and you don't want to use your credit cards that are 20, 25%, right? This product specifically works for them, right? It might not if you have a 2 or 3% interest rate in a 6 to 7% market, but it would definitely help a lot of people achieve their goals and not have to open up a line of credit or credit cards. And the other person I would say I would really advocate to use this is for sellers that are selling their home, and maybe it's an older home with a lot of issues, without having to do the repairs before you list the house, right? So this could go back to you with a lot of people looking to sell their house. They can say, hey, look, your home needs X, Y, and Z. It's going to cost you $20,000, $30,000, right? You most likely as a seller, I wouldn't say most likely, but
If
if you didn't have that money,
Right.
this is a product that you can use to sell now, right? Instead of saying, hey, selling it as is, offer it, say, hey, I'll give you a closing cost incentive. You can use my lender I have here, use a renovation loan, and do all the repairs or upgrades you want, right? The other really good thing about this product is it's not just repairs. You know, when I say renovation loan, people think it's just for something that's wrong with the property. You can use it to paint the house. You can use it to put a pool in. You can use it to redo the flooring. It can be as minor or as major as you want it, right? There's lots of different products in terms of the renovation loans. I think there is 6 or 7, 4 main products.
Do they base the loan on the after repair value of the house?
Yes.
So the loan is based on what the house is going to be worth after the repairs are done. So
I'll tell you a little bit about kind of how the process works. So, you know, a normal transaction, you've gone over this before. You get pre-approved, you find a house, and you go into contract. Once you're in a contract, you do the appraisal, you do the inspection, you do all that, and you go to closing. The only extra steps that you have to take, right, is you find a contractor. They have to be approved through us, right? You can't do the work yourself. I know a lot of DIYers, you're probably not interested in at that point, but the mortgage company has to be.
Do you feel like you're at the dentist's office chatting there?
They're doing a lot of repairs.
Speaking of renovation repairs, I don't know if it's picking up on here, but they are doing a good bit of work outside in the hallway. So if we seem like we're a
little distracted. No, you're fine. They interrupted you. But yeah, so you then find a contractor to get the work done. They have to be approved through the mortgage company, which is normal. So again, can't DIY it, can't do the work yourself. Once the contractor's approved and you found a house, you then get to bid the job. You tell the contractor, come in, estimate the repairs that I'm asking you to do, and write it up to the mortgage company's liking, right? So they'll do a bid on our bid template, and then we send it to the renovation department, and then they'll approve it. So once we then approve the repairs, we send an appraiser out there. Now, when the appraiser goes out there, he's looking at the house from a lens, okay, well, this is what's going to be done to the property. I'm going to take that into account. And then they give you an appraised value, right? Most of these programs are pretty lenient on the loan to value. I would say, for instance, like an FHA loan, the 203K program, which a lot of people are very familiar with, they'll allow you to go up to 110% of the value you can use for the loan, right? So you can be kind of underwater on it a little bit. Not the most recommended.
That would be in a case by case basis.
Right. Yeah.
I mean, you have to be real careful.
But yeah, they're definitely a great program. I'm a big numbers guy, so I got some stats that I've done some research on. NerdWallet did an article where they kind of went over how much the average homeowner has done in home improvements over the past few years. And if you look at from 2021 to 2023, it increased over $200 billion. I mean, and you could look at the timeline from 2023 and it's increased dramatically.
Yeah.
So
that's an amazing amount of money that is spent on home improvement.
Well, and you think about it, a lot of people don't know about the renovation loan, so they end up just using credit cards or HELOCs. So I'm willing to bet a majority of this money was cash out of their pocket, or it is now credit card debt.
Yep.
So that is actually something that, we can take care of for you. It's a pretty easy process. I mean, it turns your purchase timeline from like 30 days to like 45 to 60 days.
Mm-hmm.
But the interesting thing about this as well is if you're getting into this and you're wanting to buy an older property and renovate it and use this renovation loan, you tell me up front that's what you're wanting to do. And we'll go ahead and get your contractor approved, and that cuts 2 to 3 weeks out of the process, right?
Yeah. And there's a lot of older homes here in Statesville.
Yeah.
And I deal a lot here in downtown Statesville because I like the older homes. That's just my thing. I like it. Yeah. And so it's a great opportunity if you're looking as a buyer or even as a seller. These loans can help you sell your house too. So I look forward to working some of those deals.
Absolutely.
And we're involved in a couple of those right now that are rehabs that are going on. So it's good to see that kind of work happening.
Mm-hmm.
Tell me about what you got. What do you look for in this coming year? You think this is going to be a good year for Blake? Or?
I think it's going to be a great year for me as a loan officer. I think with rates getting lower, it's going to be a great year for home buyers. if you time it correctly. You've got to be ready. So if you're thinking about buying, just call me, call your mortgage professional, call your real estate agent. Just start having the conversation now, because if you wait until inventory's great again, what were you saying? It's at now like 4 months of inventory right
Creeping
now.
towards that balance.
Yeah.
Market
If you wait till it's at 6 months and you find that house of your dreams, chances are you've waited way too late.
Yeah.
You need to go ahead and have the conversation now. At least see what you qualify for, right?
Yeah.
See what the payment would be. See if it's something that you're comfortable doing.
And pricing's still going up. I don't think they're going to be able to build houses fast enough to get our inventory, to where buyers have an advantage. So I think we're going to stay in a tighter inventory market for quite some time. So if you're buying, it's a good time to buy.
Yeah.
If you're selling, it's always a good time to sell.
Yeah.
So as long as you got a plan for somewhere to go, you can sell and buy, right?
Mm-hmm.
So there's that. I'm excited for Central Honor Realty for this coming year. We're going to. One of the things I'm excited about is this content. I mean, we spent this year sort of getting a relationship with Isaiah here at So Media, and he's helped us get this platform going. And
doing an awesome job. Dude.
I'm gotten over the fear factor to the point that I enjoy it. And
I'm not quite there yet.
Isaiah is excited that I'm actually posting the videos out to look at them now. There was some growth, a little bit of personal growth involved in that. And so we're going to build this platform out and actually start a second channel that's a little more fun, a little less informational, and a little more inspirational, maybe. So we'll see how that goes. Well, this is fun. This is fun for us.
Yeah.
This side of it's fun for us to talk about what the information that we have, and it's a chance to educate buyers and sellers to help them in their transactions. But I'm looking forward to growing this and working more with Isaiah and that business. So we have, and personally too, I've added an accreditation. I've gotten I'm an accredited buyer's representative as well as a pricing strategy.
I like that.
And so it's advisor. So I've gotten a couple of my own certifications to help better serve my buyers and my sellers too. And Central Honor Realty is ready to grow. We've talked amongst ourselves and decided to bring on a few more agents this year. So if you are an agent and you're looking for maybe some change, this would be a good time to have that conversation. If you've had a great experience with an agent, let us know who that agent is and we'll reach out to them, because we're looking for agents that are very client focused, because that's our focus, is that. So we're looking forward to a great year. I'm looking forward to more time with Blake doing these. And I just hope that you've had a year well lived behind you, and that the year coming up is going to be great for you. I certainly appreciate Blake being here today. I appreciate you watching, and I look forward to talking to you real soon.
For any questions, you can visit us at centrallinerrealty.com, email us at centrallinerrealty@gmail.com, or give us a call at 704-838-6086. Thank you for listening to Central Honor Realty, the podcast.